Hey everyone, and welcome to the September monthly update video. In this video, we'll cover 4 key topics: the US government shutdown and what it means for markets, the new AI tech deals between the US and UK, Australia's latest inflation data, and the collapse of Shield Superannuation. As always, this update is general in nature and not personalised advice. If anything we discuss today raises questions about your own situation, please do not hesitate to reach out. We're always here to help. All right, let's get started. We've seen another government shutdown, which happens when Congress can't agree on a new budget, forcing non-essential services to temporarily close. Sounds dramatic, but these shutdowns are mostly political rather than economic. Market often wobble in the short term. Investors tend to sell first and ask questions later, but history shows the impact is usually minimal. Since 1976, there has been 22 shutdowns, and the S&P 500 typically recovers quickly. The key takeaway: shutdowns create noise, not long-term damage. In fact, they can present short-term buying opportunities for investors who stay focused on fundamentals rather than the headlines. So now let's look at another big development on the global stage, which is the new UK-US tech prosperity deal. So this was signed by both party leaders in September, a partnership worth hundreds of billions to supercharge AI and clean energy in this space. This deal includes major investments from tech giants like Microsoft, Google, and Nvidia into AI infrastructure, data centers, and research labs across both countries. It also contains a strong commitment to nuclear power, ensuring the energy supply needed to support the next wave of technology growth. For tech investors, this is significant. Shows a coordinated government and corporate push towards AI scalability, with both policy and capital now aligning behind the sector. And it also has an impact on the biggest issue where it comes to AI constraints, which is energy capacity. As a result, the S&P 500 has continued to climb to record highs, reflecting the market's enthusiasm for this next phase of growth. Now, in Australia, the inflation update came in slightly higher than expected at 3%, largely driven by fuel and service costs. The Reserve Bank of Australia held the cash rate steady at 3.6%, signalling a cautious stance as they monitor how quickly inflation returns to its target. On the share market side, Australian equity slightly eased in September after hitting record highs in August. The biggest drag was energy sector following the abandonment of the Santos takeover. Despite that pullback, the overall market remains near all-time highs, supported by strong performance in resource sectors, helped by rising gold and metal prices. Now, finally, one of the major stories in Australian superannuation this month has been the collapse of Shield investments. I want to reassure you that none of our clients were exposed to this fund, and hopefully through the due diligence and regulatory process, anyone affected will be able to recover their funds. So that's all for this monthly update. As always, your financial well-being remains our top priority. Thanks for tuning in, and if you have any questions about what these changes mean for your portfolio or financial plan, feel free to reach out to me. Have a great day, and I'll see you in next month's update video.